is based upon typical prices, which is the average of the high, low, and close, and that is compared against that black line that you see there. That black line is the actual moving average, 10-day simple moving average of the close. And as you can see, there are some times in there when you have the market, the blue line, the predicted medium-term moving average turning down before the actual moving average, and you have it where it turns up before the actual moving average and before it makes that crossover, which gives you an early alert that something may be afoot, that the trend may be changing, that there may be some potential for positioning at that particular place. The other indicators that we have on here are the predicted differences. The predicted differences are the blue and the green lines at the bottom of your screen. They're really a momentum indicator. And the blue line that you see there really is the predicted difference that you see up, or the predicted moving average you see above versus the actual moving average, but it shows it a little bit better visually here in terms of where to expect some kind of a movement to take place. The momentum is either strengthening or weakening. As you can see, when we broke down through the zero line here and the market started to turn down, the momentum got very weak. I mean, the market was very weak at this point right here as it sank down. Then if it crosses over the green line, which is a comparison of a predicted and an actual long-term moving averages, you have a potential signal that there's something afoot, that momentum is picking up, the market is about ready to make a move. Of course, you have on here the same problem that you had before with the the move up above, where you have the market kind of waffling sideways back and forth, not a lot of clues, not a lot of clues up here either from whatever you do. So there will be times when it doesn't lend itself so much to trading, depending upon the type of trader that you are. The Neuro Index is the last one that we have on the screen here, on this first screen of indicators, and the Neuro Index is one that is that gray line that you see there. That is a comparison of 2 3-day moving averages, and it forecasts whether the typical price will be higher in 2 days or lower. If it is higher, the indicated reading will be a 1. If the forecast is for a lower, it will be 0. A good indicator for short-term positioning. If you're ready to get into a market, you kind of want to get in on the right side, be ready to go with whatever the market is ready to offer you. Those are a couple of indicators. You will notice that on the far right, just to kind of bring you up to speed with where we're at currently with the indicators on this day yesterday, November 9th, sharp decline day. You can see that really the predicted differences, there's kind of an ongoing type of a down move. Even before the rally had stopped, before it had moved up, you could see that the whole lag was to the downside. You can see, in fact, if you are familiar with the this little kind of a difference here in the markets moving up, and we had the predicted differences moving down, indicator moving down. This happens sometimes. Quite often the indicator has a better sense of where the market is going than when you look at the price in and of itself. And then if you look at the Neuro Index, you can see that the Neuro Index has dropped to 0 as of today's trade, which would suggest that the predicted the typical price, whether will be lower in 2 days than it is today. Again, not a foregone conclusion that that's going to happen, but kind of what you might be able to expect. Now, all of those kind of indicators that we have shown so far pretty much are good for showing a sense of direction and where the market is going. Are we headed up, are we headed down, sideways, whatever. It's a sense of direction, but we really don't have any specific time frames in terms of where to put a trade, when to put a trade, and so forth. We're going to just now cut back our time again to just a 2-month chart here, because we want to focus on a couple of indicators here that are going to help us determine some things about where to place a trade. And we're going to add to our chart now the vantage point predicted high and predicted low. The predicted high and the predicted low provide kind of the real forecast. Everything else based upon the moving averages and so forth is, although it uses predicted data based upon intermarket analysis, where the target market is how it relates to 25 markets that have the most influence on it. It uses predicted data, it comes up with a moving average and all that, but all of that moving average is based upon information or on prices that have already occurred. The predicted highs and lows project a price 1 day ahead, so you have a feel for what the market will do in the next day, a range. And again, this is probabilities. We're not talking about this is absolute highs, absolute lows. But when you look at this right here, this little that different colored candle there, you can see that this is an indication of where the range is likely to be today, 1 day ahead of where it was following this sharp decline that we saw yesterday in the market. That's going to be kind of an important clue in terms of determining where are we going to be able to put our positions. In looking at this chart and where we're at today and what we would do, let's kind of cut back a little bit in time. You first of all have to understand what kind of trader you are. Are you going to be a trend follower, or are you going to be a shorter term trader? If you're doing shorter term, you're probably going to use some more tighter breakouts than you would be in some tighter prices all the way around, protective stops and so forth. If you are looking for trends, you want to make sure the market is in a trend before you actually get on board, so you're probably going to have a little different placement of your orders. You're going to have wider breakouts, or there's a possibility, of course, you can even have some combination of the two if you were to start to build a position, starting with the assumption that you're having a short-term trade, then that it might turn into a longer-term trend trade. In this case, we were going to go back to the period of time in early October where we did get the turn. We did not know if we were, after coming out of that choppy period, we didn't know if we were going into a trend following situation where we would have a trend that would emerge, or if it was going to be more of the same, more choppy, more back and forth, whatever. But we're looking here at this candle here, a bullish type of candle, kind of like the candles. It isn't the only bullish candle on there, but it's kind of at a point where, the bottom of the range that, where it struck and then had a nice white candle means the day's action was pretty strong, moving to the plus side and so forth. We also had after this day's action, remember we don't have any indicator until we have after the day's action, but we also had the first turn up in the predicted differences in a little while, suggesting that this might be a time, to make some kind of at least a short-term type trading. So from a short-term